And it's 10 a.m. in Lagos, Nigeria, and it's time for Business Morning on Channels Television. Thank you for joining us. I'm Ladi Williams.
Good morning. I'm Ini John Mekwa. Welcome to the show. Well, let's give you a little bit of news before we go into our discussion for the day. The Senate has faulted the Nigerian National Petroleum Corporation for under-remitting the sum of 3.87 trillion naira revenue from domestic crude oil sales to the Federation account between January and December 2015. In one of its adopted recommendations to the executive arm of the government, the upper chamber asked the NNPC to stop illegal deductions of 865.44 billion naira from the source and directed the Nigerian Ports Authority to refund the sums of $37.67 million, 67.5 billion naira, 1.07 billion naira, $2.3 million, and 196.257 euros, accordingly to the country's treasury. Meanwhile, the Senate also mentioned that 12.13 billion naira outstanding collection from solid minerals was not remitted to the Federation account, but kept in an account maintained by the Central Bank, which contravenes the provision of Section 162, Section 1 of the 1999 Constitution as amended.
All right, but with the Delta variant of COVID-19 spreading and countries recording a surge in cases, the Director General of the World Trade Organization, Dr. Ngozi Okonjo-Iweala, says the WTO is involved in the production of vaccine as well as inoculation of citizens, especially in the poor countries. Speaking at the virtual launch of the 2021 Commonwealth Trade Review, Dr. Okonjo-Iweala asked nations to work on improving supply chain scarcity of vaccination as a path to economic recovery post-COVID. Do take a listen.
New coronavirus variants are making it clear that failing to accelerate vaccine production scale-up and rollout threatens the recovery everywhere. That is why I join hands with my counterparts from the WHO, the IMF, and the World Bank to call for a $50 billion upfront investment in vaccinating at least 40% of people in all countries by the end of this year and 60% by the middle of 2022. IMF economists estimate this would increase global GDP by 9 trillion by 2025. I know that such a positive response would benefit Commonwealth members' trade, in particular among developing countries and small island states. The WTO has joined the Vaccine Manufacturers Task Force with CEPI, Gavi, and the WHO because trade is an indispensable ingredient in vaccine scale-up. And I want to underscore that the reason I'm talking so much about vaccines is my fundamental belief that this lies behind our increased ability to trade and to go for a sustainable economic recovery.
Oil prices fell more than 1% today, extending losses as investors brace for more supplies following a compromise between top OPEC producers and as U.S. fuel stocks rose, raising concerns about demand in the world's largest consumer. Brent crude futures for September dropped 1.2% to $73.85 a barrel, while U.S. West Texas Intermediate crude for August was at $72.21 a barrel. That's down 1.3%. Both benchmarks slid more than 2% on Wednesday after reports that Saudi Arabia and the UAE reached a compromise that should pave the way for a deal to supply more crude to a tight oil market and cool soaring prices. While the deal may take some time to get finalized, it seems that the UAE will be allowed to produce more output next year. Well, what are the possible impacts of this deal? And Damilola Akimbami, the head of research at Financial Derivatives, speaks to this and other burning economic issues on our commodities market update. Hello, Damilola. Welcome again.
Good morning.
Time this week.
Thank you for having me.
So finally, the agreement, a compromise that we were looking forward to has come.
Yes, it has.
And UAE may be allowed to supply more. Do we have a figure to this, increase? Do we know how the quantity and what are the likely impacts?
Oh, well, right now, the UAE is going to be allowed to increase, or they're going to increase UAE's quota, OPEC quota. So it's going to be producing about 3.6 million barrels from about 3.2 which was where the level it was producing at before. So it's not finalized completely yet because the whole group, that's OPEC Plus, they have to meet and they have to get everyone's buy-in. And also he has raised the possibility of other countries also asking for their quota to be increased. But definitely when this announcement was released yesterday, we saw oil prices trading in a choppy movement. And this morning so far, Brent has lost over 1% and is trading around $73 per barrel. And this is, it comes as no surprise because we know that when supply increases, price would fall. Yeah. And there are other factors that are spurring this movement in oil prices. We know that also the UAE's fuel stockpile to increase. So that means the demand for oil in US, and US is the largest oil consumer, that demand is trickling down. We know that the Delta variant is spreading. It's now in Indonesia and parts of Europe, in India. So we also have that happening right now in the global oil market. So all these factors are in support of oil prices falling, but then demand is still there, and there are some investors that are optimistic that the level of global demand may be strong enough to offset these factors.
Even if they, come to an agreement and all of that. But do you see this the trending price, continuing?
I feel oil prices would, even if oil prices fall, it's still going to stay above $70. Bear in mind that the markets have already anticipated this. Bear in mind, we're not even talking about Iran's oil yet because the negotiations have been put on hold till mid-August. Yes. So the markets have factored this in. So we might not see it's a $78 or $80 price benchmark right now, but we still see oil prices trading above 70. And if more countries get vaccinated or get their people vaccinated and demand picks up, we would see a balance in the oil market.
That's also a major concern now with the Delta variant. I mean, even here in Nigeria.
Yes, exactly.
It's becoming a major threat. And even though UK, they still want to go ahead with that July 19th, but they have a lot of knocks from Ireland and some other neighboring countries. So is this not going to affect the price, even though you have UAE supplying more now?
Yes, so it's a major threat because if more countries get this variant and they're forced to impose lockdowns, then obviously demand will be affected. And once demand falls, prices too would fall. And if you're having low demand and you're increasing supply at the same time, the pressure on oil price would be, be more significant.
But do you think countries will adopt lockdown anymore? Because I hear a lot of people say we have to learn to live with COVID. People should take responsibility.
Can we afford another lockdown?
Yes, and the cost of lockdowns, I mean, global economies have not recovered. We heard Dr. Okonjo-Iweala talk about trade and all that. Economies have not recovered from the lockdowns we have had. Do you see countries going for another set of lockdown?
Well, for a country like Nigeria now, we obviously can't afford another lockdown. That's why we have to have that social responsibility. That's why everyone needs to get vaccinated. That's why everyone needs to
If the vaccine is available.
That's
also a problem in Nigeria.
Yes, but I also heard that we're going to get about 3 million doses of the Pfizer
at the end of August.
Yes. So we might say a mix and match between the AstraZeneca and the Pfizer. But then still, because you even know that you can't afford to have another lockdown, so what measures are you putting in place to prevent or stall this spread? So something has to give. If you're not willing to social distance or wear masks or do whatever or get vaccinated, then be prepared for a lockdown. Really, well, you can't eat your cake and still have it.
Yeah. Anyway, let's look at, we're expecting the inflation figures for June today. And, FDC is projecting 18.1%, while AfriInvest forecasts 17.7%. Yours is higher. So what do you think is going to happen?
Well, one of the reasons or some reasons why we are projecting a reversal in the downward trend, which we saw in April and May, is because, one, we are seeing new impetus for price momentum. So by that, I mean that, for instance, look at energy prices. They're on the increase. Take, for instance, diesel, which is the fuel commonly used for logistics and distribution. The price of diesel is trading or is selling around 300 naira per litre. We know that food prices are higher right now. Then also the exchange rate impact, the currency pass-through effect. We know that in May, the CBN adopted the NAFEX as its official rate. So that effective impact will be felt, if at all, in June and in July. So definitely that is also another factor that we're looking at, and we're using that as one of the reasons for why we're experiencing this increase in inflation. And also we expect that these effects are beginning to wane and are beginning to fade off. So definitely we expect to see that also play into the market. And if this projection is accurate when the numbers are released and what we're projecting comes to pass, the market isn't going to be surprised, because we all know what is happening in reality. We know that prices are higher. We know that even if you look at the FX commodity index, as at last week, the index was up about 3%. Ginger prices are up, soybean, cashew nut, and that's wholesale prices. So right now we're seeing that both wholesale and retail prices are moving in the same direction. So definitely, if this happens, if inflation increases, MPC, the Monetary Policy Committee of the CBN, is meeting in 2 weeks. Yeah. We don't expect that increase to have that much of an impact on their decision because it's just 1 month's increase, and that's not enough to make a judgment call. So we don't think that it would
what if it doesn't increase? I mean, we've been surprised twice now.
We've been surprised twice, and the markets were actually surprised that at that downward movement. And what we could attribute that decline to be one, because of the base year, because we know that every 5 years you are supposed to reweight or reconstitute your consumer price basket. The last time Nigeria had a reconstitution of its price basket was in 2009 or in 2021. So definitely there are some flaws in the measurement process. And also we know that this time last year, we were in the peak of the lockdown. So carrying out a price survey would have been a bit difficult. So again, it brings to question how the survey, how the data points were collated. So definitely, these are some of the things that we are looking at. Okay, maybe that's why we saw a price decline. And if you look at what is happening in reality, these factors are in support of a price increase. But more importantly, what should we expect? Because these are historical figures. We're entering the harvest season soon. So definitely harvest season, increase in supply, that should moderate price. We also have the fact that consumer demand is still low. Purchasing power is really low at this moment. So the demand for these goods are not really there. Yeah. So these are some of the factors that would moderate prices. So
we did have US and the UK.
Exactly,
2.5 and about 5.4%.
These countries, record level.
How would this, affect frontier economies like Nigeria?
So it just shows that globally the price pressures are still there. Both global economies, emerging markets too are experiencing price pressure. So it's not like, okay, it's just one country that is experiencing this. And for global economies, if they continue to record higher prices, it just means that, the timetable or the timing for an interest rate hike might be brought forward much earlier than expected. We know that as at the last US Fed meeting, sometime in June, the US Fed had brought forward its date for an interest rate hike to about 2023. And now its inflation rate is at 5.4%. If it continues to increase, we might see them coming up with an earlier date. And what that means for emerging markets like Nigeria, we have a lot of external debt. And if the interest rate increases, the dollar strengthens in response, meaning that servicing your external debt becomes more expensive. So that is the catch or the issue for emerging markets.
For on the consumer side now, whether the inflation goes up or it goes down, the figures, does it affect Nigerian consumer behavior? Does it affect? Do we see any change? Do we see any impact? Or people just like, it's one of those stories that they bring on the news and they move on with their own lives?
I think right now the average Nigerian is feeling the pinch. Because whether the numbers go up or down, again, even if the numbers decline, maybe it's declining at a slower pace, but if you still go out, the price of a basket of tomatoes is still trading about 60,000 naira. So the
price of bread has increased. The price of cereals, milk
is about 17,000 naira. So what you see the average Nigerian do is that they begin to look for cheaper alternatives, if that's possible, because some of these substitutes also are experiencing an increase in price because the cost of raw materials have increased. And also you might find out that they begin to reallocate resources. So instead of spending so much on transportation, maybe I start to carpool. Instead of going to the office, I start to make use of virtual or video conferencing. You also pay for data. So you are going to see a reallocation of resources, definitely. Spending less on luxury and more on essentials.
Okay, but what can emerging economies do, at a time like this where you have the US and UK figures at record highs? What can we do to...
Record highs, but not close to Nigeria.
Well, not close to Nigeria, but, what can, emerging economies actually do at this point?
Well, first of all, you have to understand the features of your country. Because take, for instance, Ghana. Ghana has been recording a steady decline in its inflation rate. So what is Ghana doing differently than Nigeria? So every country has its unique peculiarities. So some of them have been successful with their stimulus packages, and now, because they've been able to stimulate growth to an extent, they can now start to increase interest rates. And some of these countries, for instance, Ghana, Kenya, even South Africa, they have positive real returns to investment, meaning that their interest rates are higher than the inflation level. So even if they want to still keep or maintain an accommodative stance or even tighten for that, they have enough headroom to make whatever adjustments to the monetary policy. But Nigeria, for the past at least 2 years, we've been recording negative returns on investment because our MPR, our monetary policy rate, is at 11.5%. We are talking about inflation rates currently at 17.93%. Probably to increase to 18%. So definitely, we don't have as much options as some of these countries that have positive interest rate return.
Okay, just before we go to the commodities market, I mean, there was the news that the federal government will sell and concession 38 state-owned assets.
Yes.
Yeah, and the plan is just to increase export earnings from Calabar, Kano to about. Could you tell us what that is?
So basically, what the federal government is doing is that it wants to either sell or concession some of its idle assets, basically just to boost its revenue. And we know that since Nigeria received most of its revenue from oil earnings, and we know that in the first 5 months of this year, oil proceeds are falling by about 50%. So again, it speaks to that reduction in your dependence on oil proceeds. So the government is looking for other sources, such as selling its assets. So if you sell your assets, you reduce your deficit financing needs, it creates more funds for you to even spend on critical projects. If you privatize some of these assets, you're also going to attract the much-needed capital that you require to invest in this project. So that's what the government is doing.
When we talk about concession in privatization,
Yes.
we've seen issues with these contracts, in the past.
Yes.
So we say, is this not just a quick fix, a temporal fix that would have consequences? Or are these not assets that the government is supposed to maintain, for nation building? Or you understand?
Yes,
should this be the option?
So, first of all, I know that, yes, or we know that Nigeria has that issue of corruption, Nigeria has that issue of bureaucracy, and a lot of countries also have that. So obviously it's a threat and a risk to the process. Like, would the sale of these assets be done effectively? Would there be transparency and what? That definitely is an issue, but that shouldn't stop us from having several options in terms of building our revenue base. So one of these options is sale of assets. You have your oil revenue, you have your non-oil revenue. So you have different portfolios so that at least if you're experiencing some shock, for instance, in oil revenue, can you fall back on your cocoa export earnings or can you fall back on your sale of assets? So it's not just a one-size-fits-all. You have different options. So it's, like I said, again, it doesn't take away the point of transparency. There has to be transparency in the process. And if there's transparency, obviously you would attract more investors and you would be able to generate as much capital as needed.
All right, let's look at the agricultural commodity prices. See, wheat, corn is up, sugar is up too, and cocoa is down. What's driving sentiment there?
Yeah, so for the global commodity market now, if you look at our key exports and imports, as in if you look at that picture, everything is red. And for instance, now wheat, we know that we have weather conditions affecting wheat in growing regions in the US and Russia. And definitely these commodity prices are increasing, global commodity prices are increasing because we're an import-dependent country. And if you also add the exchange rate impact, so definitely to feed into cost of raw materials and to feed into our local commodity prices. So it's right now it's negative for Nigeria. And even our export cocoa, the price of export is less than $2,500 per metric ton. But the good news is that at least on the production level, we are beginning to record some increase in our cocoa output level. So that should offset the price of cocoa globally.
And we hope we'll see more increase, especially with cocoa. I'm really interested because, it's a global raw material for a whole lot of things.
For a lot of things, chocolate, cocoa butter, and all that.
Exactly. So I just hope we will explore the potentials inherent in that. Well, thank you so much, Damilola.
Thank you for having
you on this show.
Thank you.
So enjoy the rest of your day.
And you too. Thank you.
All right. So we'll take a break now. After the break, the Central Bank of Nigeria is set to begin the implementation of uniform standards on transfer pricing. How does that affect you? Bala Ologunro, Senior Research Analyst with Quadra Securities, will tell us. That's after the break. Stay with us. It's Business Morning on Channels Television.
Welcome back to our next conversation. Now, the Central Bank of Nigeria said that it will commence implementation of uniform standards on transfer pricing arrangements in the Nigerian banking industry from June 2021. About 1 month after, what impact does the uniform standard have? Gbolahan Ologunro, Senior Research Analyst with Quadra Securities, joins us now. Great to have you.
Good morning. Thank you for having me.
Good morning. So the CBN recently published the supervisory framework for payment service bank. You know, what does this framework entail and what does it mean to an average Nigerian?
Yes, so I think the way to start is to take us back to 2012 when CBN launched National Financial Inclusion Strategy with a goal of achieving financial inclusion rates of 80%. And I think thus far, we've been able to record steady progress over the years. However, the overall progress still remains suboptimal. I think when you consider the fact that financial inclusion for the adult population is roughly about 51%. So one of the strategies that CBN has identified as a catalyst to accelerate financial inclusion in Nigeria has to do with the activities of payment service banks. So that supervisory framework published by the CBN, it provides guidelines on a broad range of issues that would, provide guidelines for operation of payment service banks in Nigeria. So in terms of the activities they're expected to be involved in and their activities they're also excluded from, CBN did well in providing clarifications on these activities. In addition, CBN also provided guidelines on corporate governance framework, their board composition, how they should also set up their data infrastructure and measures that should be put in place to also curtail the activities of cyber criminals. So it's, an elaborate document from CBN that we're optimistic about in terms of how that will drive activities of payment service banks in Nigeria.
So do you think this will impact players in the telecommunication sector, given that they have applied for the PSB license?
Yes, to the best of our knowledge, major players in the sector have all applied for license from the CBN to kickstart operation of payment service banks. So MTN, Airtel, and even Glo, we all understand that these companies have applied. However, CBN requires that they are to operate those businesses as a standalone. In other words, those businesses should be set up as a subsidiary rather than, MTN still carrying out those businesses. So it's the case of you have to set up a subsidiary that will carry out the payment service bank operations in the country. So in terms of the activities they are permitted to engage in, they are allowed to issue prepaid card services to their customers. In addition, they're also permitted to facilitate payments of transactions for their customers. However, in terms of activities they're excluded from, I would think CBN has been able to somewhat protect the banking industry. I think when you consider the fact that they're excluded from granting out loans and advances to their customers, in addition to facilitating sales of foreign currency.
All right, so the regulator has, through the framework, mandated operators to deploy at least 25% of their services to rural areas to be defined by the regulatory body from time to time and other unbanked areas. Do you think these PSBs can, strive in rural areas?
Yes, so for us, we think, that's a very positive development when you consider that a large proportion of those who are unbanked actually reside in these rural areas. So that strict condition put in place by CBN, ensuring that you must have 25% of your financial touch points in the rural areas is one that we think will, improve or contribute immensely towards improving financial inclusion. But the major barrier we see to the actualization of that target has to do with financial literacy. So we understand that, looking at the various geopolitical zones across the country, those in the northwest and northeast, that's where you have a high proportion of those who are financially illiterate. So we think, given the rising insecurity challenges in the country, that might potentially limit the ability of this payment service bank to deploy agents to those areas, even as they begin operations of the payment service bank. So that's the major barrier that we think might constrain the inclusion of those in the rural areas who we think, a bulk of them still reside in the northwestern and northeastern parts of the country.
So is there a way you think this process can be accelerated? You talked about financial literacy, especially in the rural area. Is there a way you think it can be accelerated?
Yes, so I mean, the way to look at it is to consider how government can also complement the efforts of the central bank. So in terms of that, we've seen cases of attacks and kidnapping in schools. And of course, if schools are unable to operate, it means that they're unable to, of course, provide services to students on a daily basis. So that is going to be a major drawback if you are looking at improving financial literacy in the rural areas. So we think the federal government has to step in at this point to complement the efforts of the central bank by improving security conditions in the northwestern parts of the country so that school activities can go on without any form of hindrance or setbacks due to security challenges. If we are able to get across that, we think as more people become sensitized and enlightened about the need for, getting connected to the banking industry, getting connected to payment service banks, will definitely be on track towards improving financial inclusion in Nigeria in the medium to long term.
All right, but do you think the activities of payment service banks, when they begin, full operations, will it pose a threat to earnings of banks?
Yeah, so what we think is, it's going to pose, they're going to stand a competition. They're definitely going to pose a threat to banks from the perspective of competition. And in that regard, we are looking at provision of electronic banking, electronic transactions to customers. So currently, a number of banks have been able to make significant investments in their technology just to improve customer experience when they're making use of their mobile apps or even internet banking for transactions. So the activities of payment banks also, it's more or less in line with what banks are already doing. So in that regard, we see potential for, reduced transactions from the part of the banks, particularly the fact that banks are also playing in the rural space, which is an area where we think payment service banks are also going to focus on. So we see more of, increased competition in that space, but we think the ultimate benefits will still be positive for the consumers, given that we are likely to see reduction in transaction fees going forward as competition in that space intensifies.
Okay, so with this, I remember we talked about the USSD and all those platforms. This is going to reduce cost, for the consumers. Though this is actually something that consumers should embrace.
Yes, so certainly I think if you look at the tussle between mobile network operators in Nigeria and banks with regards to the USSD service code, we've seen disagreements with regards to what should be the appropriate pricing for that service. So now what CBN has done is to enable these mobile network operators to now, carry out those services on their own without necessarily relying on these banks. So what we think is competition in that space will intensify, and we think it will then get to a point where these operators and banks will have to now reduce transaction charges just to attract customers to their platform. So it boils down to who is able to now offer, exceptional customer experience to their customers in addition to reduced transaction fees.
All right. Thank you so much for joining us on the program. It was great having you. Bolan Ologoro is the senior research analyst at Codrus Securities. Thank you so much.
Thank you for having me. Have a nice day.
All right. Time now for an opening call to the market with Will Ibong. Yeah, we saw the bull yesterday, Will.
Yes, Ladi, good morning. The equities market, thank God, which closed flat on Tuesday, was able to gain about 8 billion naira yesterday as investors showed particular interest in shares of Capital Hotels and Total. And it is good to know that Total share price was up by over 6% at the close of yesterday's trading. We saw that it was up 0.04% and the 37,872.55 points, and the equity cap remained at 19.732 trillion naira. The market is hopefully taking a bullish posture, and we're hoping that continues for the rest of the week. However, its year-to-date loss currently stands at 5.96%. We observed a marginal drop in the total volume of trades yesterday. Volume traded at the close of yesterday's session stood at stood at 197.23 million units, while the value traded rose quite substantially at 2.13 billion naira and exchanging over 3,600 deals. UBA, Access Bank, and Zenith Bank actively boosted the market turnover, while MTN topped market value list. We had mixed results. And on the sectoral charts, the banking and insurance counters recorded declines, and there was no movement in the industrial goods counter. However, consumer goods and oil and gas counters were the gainers for yesterday. As measured by market breadth, the sentiment was positive, as 17 tickers, that's the company components listed on the stock exchange, advanced as against 11 losers. It's, however, interesting to know that Capital Hotel and NCL Nigeria recorded massive gains yesterday, while Link Assurance and Cornerstone Insurance recorded huge losses. We'll move over to the NASD market, the OTC market, where the NASD index declined, slipped marginally by 0.06% to 761.44 units, while the market cap was at 661.82 billion naira. Meanwhile, volume, value, and deals rose at the close of yesterday's trading session, and the Nigerian Exchange Group was the only security traded yesterday out of the 39 listed securities on there. However, its share price declined by 26 kobo to close the session. We have Phil Anegbe on the line, a research analyst at Cardinal Stone Securities, to talk about the happenings there. Good morning, Phil.
Yeah, good morning.
Phil, just tell us, we've seen the ups and downs in the markets. We've seen sell-offs in the banking sector. The counter is down by almost 1%. This might not be so great for short-term investors. Are you bullish on the markets, for tomorrow and the rest of next week?
Yeah, for the rest of the week, we expect mixed performance in the market. We're seeing cautious trading in the space and bits and pieces of profit-taking. A few investors are positioning ahead of the release of the Q2 results, with some companies likely to benefit from very low base effects, and some companies are likely to perform just because the base was low. But we think that 4 critical factors for market direction this year remain the level of interest rate and system liquidity, which could influence retail trading. We also think the level of FX liquidity is important, given that we are talking of plans to borrow in the dollar. And then placement rate for bank deposits that is largely influencing big institutional domestic investors. So we think those factors are important. But in the near term, we expect mixed sentiment. People continue to look at bargain hunting opportunities while trading largely mostly cautious.
Talking about the FX liquidity that you talked about, you said it's quite important, but we see that the FDI foreign direct investments in Nigeria have declined for we have the decline of 27.5%. How do you think that this would balance out, saying that you are optimistic? What do we do to remedy that? How do we get investors into our sector, saying that they are abandoning our stocks?
Yeah, from the FX liquidity perspective, I think we are still a bit cautious. But we think that FX liquidity will be largely influenced by the success or otherwise of planned foreign borrowing. We are talking about $6.1 billion in budgetary external loans that we are taking. So if that comes to play, if that comes early, that will help to improve FX liquidity conditions. Another influence could be oil prices. But then we are still keeping a close tab, realizing that we have significant backlogs that the CBN is still trying to clear. So until we see improvement on those fronts and maybe get sizable foreign borrowing that could actually influence the liquidity situation, things may still remain largely cautious. So the liquidity play is largely going to be looked upon by foreign investors. They are still very cautious of our market. They are more or less cautious of taking up Naira rates because of the liquidity reality. But if the foreign borrowing come in to play, come into the country, and oil prices continue to improve, that story will slightly change. But we'll watch and see how events unfold on that front.
Thank you, Mr. Phil. But before you go, I just want to say, what stocks should we watch out for in the market?
Well, we should watch out for stocks that are likely to be boosted by low base effect. There are a couple of stocks. I know last year we saw the brewers they did poorly in Q2 and Q3 because it was more or less like an absent quarter for them because of the whole restrictions on bars and events that affected the growers. So you expect that given that activities are relatively better or resumed now, that could provide some sort of base effect into the performance. You also look at the likes of Okomu and Presco, they are agricultural or the commodity producers. They are likely to do well as agro producers. Talking about CPO prices, they are relatively elevated level, and we've seen some currency depreciation. That may also feed into the performance of agricultural producers like Presco and Okomu. We expect them to have a solid year. And you also look at stocks that are likely to have good base effects, like the grow, as I've mentioned. So those stocks actually perform from a fundamental standpoint.
Thank you so much, Phil. That's Phil Anegbe, research analyst at Cardinal Stone Securities. Now at the fixed income market, we see that bonds traded bearish yesterday. As it did on Tuesday, average yields rose by 3 basis points to 11.7% across the benchmark curve. Average yield increased at the short and long ends due to sell pressure, while yield fell flat at the mid segment due to high demand. Similarly, at the NTB, that's the Nigerian Treasury Bills secondary market, it was bearish as well. The average yield rose by 17 basis points to 7.0%. And across the benchmark curve, the average yield rose at the short and the mid and long segments due to sell-offs at the, and we can see that there was a PMA yesterday where the CBN offered Treasury bills worth about 109 billion naira, and total subscription was over 570 billion naira. But about 6 billion naira was eventually allotted across the 3 tenors. There was also renewed interest for the CBN special bills for August the 30th, 2021. Treasury bills during yesterday's session traded with a bullish sentiment. And at the OMO market, we see that the average yield at the OMO segment fell by 23 basis points to 9.5%, with OMO auctions scheduled to hold today. We're hoping that that will bring in more liquidity, but we expect another quiet session in the secondary market. But we don't know what's going to happen today, and we're hoping that investors will flood the market and take on more subscription, and we're hoping for a bullish secondary market performance. That's all we have for today, Laddie.
All right. Will, thank you so much for that update. Let's see how the market closes today. Anyway, we'll take a quick break now. Business Morning returns in a moment. Do stay with us.
Yeah, welcome back. You're still watching Business Morning here on Channels Television. We'll go to the crypto space now. Laddie is standing by, and Laddie told me earlier that Bitcoin is increasing its dominance, even though the price is not so encouraging yet.
Yeah. Bitcoin dominance is actually inching up, but the market is actually in the green at $32,437 for Bitcoin, and a couple of major altcoins are also in the green, and we have the stable coins actually in red territory, down some points, showing that traders are getting back into the altcoins. Look at the fear greed index. We have 20 points. It's still extreme fear in the market. About a month ago, we had fear at about 38 points, but today's extreme fear, and you can use this fear greed index to your advantage. You know, when the market is extremely fearful, those are buying opportunities. Why? When it's greedy, you know, those are times to actually sell. Market cap, $1.33 trillion, up about 2.39%, and 24-hour volume, $62.90 billion traded in the total crypto market. We still see that volume is actually still trending down. Bitcoin dominance is at 45.92 at 8 a.m. this morning. Let's bring in Rume Ofi now. Hello, Rume.
Good morning, Laddie.
Good morning, Rume. Great to have you. Well, I saw a quote by one of the co-founders of Dogecoin, and he's been blasting the cryptocurrency market, talking about it for the rich elite. What's going on there?
I think the mistake the co-founder did was to blast cryptocurrency. He was supposed to talk specifically about Dogecoin, because Dogecoin was created from joke. It's a joke currency, and it's a funny cryptocurrency that doesn't have a definite volume in that would total
and that joke gave about 8,000% from the beginning of the year till now.
Yes, I can tell you really that. I can tell you that those can have from a huge amount of speculators that the crypto ecosystem has ever imagined. So people just go there to be able to see how far they can make money in the short term, because Dogecoin is not a store of value, and all the price is up. I mean, even if you go online, you see people saying things like, "Oh, I sold my house, I sold my car, I bought Doge. Oh, Elon Musk, why are you doing this? Da da da." That is not about cryptocurrency. That is for Dogecoin, because it's a joke. I don't think my intellectual capacity will allow me to do all of those things. It's really a joke, and a lot of people fell for it, and now it's coming out to see that cryptocurrency is becoming more the work side of capitalism. It is how it is being designed. I think, on a second thought, that they didn't make enough for me. That is why it's standing that way.
Oh, because I had the other founder actually sold his Doge around 2014 or so to buy a used car, and we saw Doge actually get as high as 68 cents in the bull market.
Yeah, it went as high as 0.8 at some point. A lot of persons tried to go to $1, but here we are. There's no need to cry. It already happened. So, and there's one thing that Elon Musk said that I was really, really particular about, when he said that he's not going to give in fully into Dogecoin because the whales are holding too much. Imagine one person holding about 28%. That's crazy.
Okay. All right, Rumi, before I let you go, the UK inflation figures in US came out yesterday. How do you think this is going to affect risky assets like Bitcoin?
I think Bitcoin has a whole lot of chance to be able to prove itself as an asset that can stand inflation, because you see now a lot of these countries, I don't want to mention ours because ours is double-digit inflation. I think the recent is more about 5% for the US, and people will see that we need more fiat to get their goods and services. So at the end of the day, the fact that we have this shortfall, I'll call it mid-term correction for Bitcoin, a lot of funds are going to flow in very soon, because people are going to see that, wow, this is a digital gold really, really where we can be able to hold our value of our currency and the one that depreciates really fast.
Right. All right, Rumi. Always great to have you. Thank you so much, Rumi.
Thank you very much.
All righty. That's how the market is looking right now.
Yeah, well, the thing you said about the guy who's not happy, he sold his invention, and now he's not happy.
Too early.
Too early. He gave up too soon.
Too soon.
All right, thank you so much, Ladi. Well, now we'll head to London, where Juliana is standing by to give us updates from London. Hello, Juliana. Good morning. And hiring surged last month. Vacancies are now higher than before the COVID-19 pandemic. However, wage growth is lower. What's going on, Juliana?
Good morning, Innie, from my iPad. Look, we've had really positive UK unemployment data. This is something that we're used to now. I think this is probably the 5th or 6th consecutive month that we're seeing unemployment rates falling, and now at 4.8%. According to the information I read, we're actually seeing wages rise. They rose 7.3% year on year, which is absolutely good. This doubled down on the sentiment that we've already been seeing, that the UK economy is starting to grow. Last month, over 362,000 people were added to payrolls. This is actually the highest payroll increase since April last year. So we're certainly getting back to those pre-pandemic figures that we were also used to. Also, as well, there were over 860,000 vacancies out and about in the month of June. So the jobs are there. The jobs are there. It's just now a question as to whether the UK workforce are skilled enough, or whether or not these positions are viable. So it's all good news. Of course, some people are looking much further ahead. They're looking towards September. We know that the furlough scheme, which is still reporting about supporting about a million jobs here in the UK, that is going to be completely tapered off. So will unemployment peak at about 5.4%. That's what the Bank of England is saying, but we'll just have to wait and see.
All right, so the world's rarest stamp is returning to Britain permanently for the first time in 143 years, Juliana. How important is this?
Gosh, well, it's important, certainly if you're a stakeholder, if you're used to those types of things. I had to write some of these notes down because it's a peculiar title. It's called the British Guiana 1C Magenta, and it's been dubbed the Mona Lisa of stamps. It is a very old stamp. It was purchased in 2014, I believe, by Stanley Gibbons for about $8.3 million. It's been sitting in a warehouse in the US, and they've obviously decided that now it deserves to be right front and center. So it will be going on display in central London. It's a very, very rare item, as you said. According to some reports, it's one of the most valuable man-made items still around in the world, much more expensive than 24 karat gold. So yes, if you are somebody that's looking for something to do in the summer holiday and you're in London, having a look at this rare stamp could be one of those things.
I guess this is another thing to do from July the 19th. Another interesting thing to put on your schedule.
Absolutely. I'm counting down, Innie. I'm counting down.
I can see it on your face. Oh, thank you so much, Juliana. And we'll see you again at 1:30 during Business Incorporated, and we'll have updates from developments in the world of business. Enjoy the rest of your day.
Thanks, Innie.
So, Ladi, are you going to make good use of this stamp? July 19th is just a Monday. It's a few days away.
Well, I'm just, researching these markets right now because I didn't actually give you the top gainers this morning. We have Affinity shares doing $27, up about 35% this morning, and we have Flow. So it looks like the NFTs are actually, doing well this morning with Engine, Mana, and Chili's all up double digits this morning, even though, this market is kind of like in red bearish territory. If we look at the top 5 losers, we have Celsius there, down about 6.77%, and FTT at $27, down about 4%. So, I told you about that quote from the co-founder of Doge. Let's see that quote right there now. He says, I believe that cryptocurrency is an inherently right-wing, hyper-capitalistic technology built primarily to amplify the wealth of its proponents through a combination of tax avoidance, diminished regulatory oversight, and artificially enforced scarcity. That's Jackson Palmer there, co-founder of Dogecoin. Well,
Mr. Palmer sounds very, very angry. Like,
yes,
what did you do to him?
Well, maybe because he sold his holdings in Dogecoin quite early. The Dogecoin was worth nothing at that time. So who knows? It could be that, or maybe he might be onto something. We don't know.
All right, we'll just wait and see, as we always do in the world of business.
Yes.
Well, that's it on the program today. Thank you so much for watching. And do remember that Business Incorporated will be on at 1:30, where you have updates from the world of business. I'm Ini John Mekwa.
And I'm Ladi Williams. Thank you for watching.